Welcome back. I'm Sid Rajeev, Head of Research at Fundamental Research. So in my last video, I talked about the 5 key metrics that we use to screen and select for top picks from our universe of coverage. If you have not watched that video, please make sure you do. We'll have a link to that video below here. So over the next few videos, what I'm going to do is to introduce you to some of our top picks in each sector. So I'm going to talk about our mining top picks, our picks in real estate space, cannabis, technology, cryptos. So please ensure you subscribe to our channel so that you get alerts when we do such videos. So today I want to start with gold. I picked gold because gold is one of the commodities we are bullish on for the second half of this year. We expect gold prices to perform well once inflation kicks in with a global economic recovery. So when it comes to analyzing companies, especially companies focused on commodities, what we are looking for is companies that can not only take advantage of rising prices, but also do well relative to its peers when prices are falling. So for that, we look at 2 key metrics. Number 1 is the cash cost or the production cost of the commodity. Number 2 is how strong is the balance sheet. So we look at the cash position, the working capital, and also the debt structure. So based on those 2 metrics, I'm going to introduce you to 3 players in the gold junior space, and I'm going to talk about each of them today. So our first company today is Gran Colombia Gold. This company is the largest gold producer in Colombia. They produce about 200,000 ounces per year. But to put things in perspective, large producers produce millions of ounces per year, while smaller ones produce 20,000, 50,000 ounces a year. Gran Colombia is at 200,000 ounces. Now the best point of this company is that their cash cost is just $650 an ounce. Gold prices are currently $1,750, so you can calculate the margins there. The second nice thing about Gran Colombia is that they have a strong balance sheet. They have over $70 million in cash with a low debt to capital. In terms of valuation metrics, the company is trading at a forward EV, enterprise value to EBITDA, of just 0.7 times versus the sector average is over 3 times. And on top of that, they offer dividends to investors. The current dividend rate we estimate is about 3.2% versus the sector average of 1.8%. So based on the fundamentals of the project they have and the valuation metrics, we feel Gran Colombia is an attractive play to watch. The second company I want to talk about is Steph Gold. They're a brand new gold producer in Mongolia. They produce about 40 to 50,000 ounces a year, and the best part, just same like Gran Colombia, is their low cash cost. They're producing at just $600 an ounce. Now in the coming weeks, they're going to come up with a feasibility study that could potentially demonstrate or confirm that they can increase production to 100,000 ounces plus a year scenario. Now again, same like Gran Colombia, they have a strong balance sheet. They have over $30 million in cash and a low debt to capital. Valuation metrics of Steph are also favorable. They are trading below the key metrics such as the EV to resource, EV to revenue, EV to EBITDA of comparables in the space. So that was my second pick, Steph Gold. The third company I want to talk about is Contango Ore. Unlike the first 2, this company is a development stage but near-term producer. One of the best aspects of this story is that the new CEO is the founder of Nova Gold and Trilogy, 2 successful juniors. The new CEO took over last year, and immediately after that, he attracted Kinross to come in and partner with this company, Contango Ore. The project is in Alaska. It's a gold project. The project is close to Kinross's Fort Knox mine. So Kinross's idea is to ship materials from Contango's project to their own mine. So that allows the project to be advanced to production much quicker and also at a low capex. Now this project has the potential to produce over 200,000 ounces of gold every year and at a cash cost of about $750 an ounce. Again, as with the first 2 companies I mentioned, this company is also in a strong cash position. They have over $30 million in cash, which allows them to further explore the property that they have and potentially expand their resource. So those were the three ideas I wanted to share with you today. In the coming videos, I'll be talking about gold explorers, copper companies, EV metals. So make sure you subscribe to our channel. As always, if you like these videos, give us a like. Thanks for watching and stay safe.